Hello there guys and welcome back to Ugosfx. I've tried so many strategies, blow so many accounts, joined different page signal groups, but I kept losing money. Not until I discovered these 3-step simple trading strategies that I will reveal in this video. Kindly sit back and relax. Subscribe to my channel if you have not done so, and put on the notification bell so that you'll be the first to know when I drop a new video. In this video, I will walk you through the 3 steps one by one. Pay attention because it is so simple. Let's go. Step 1. Identifying your bias. What do I mean by identifying your bias? What I mean by this is identify in which direction is the market moving. Is the market bearish or is the market bullish? So you have to identify your bias on a 4-hour time frame. So first you have to do is to move down to 4-hour time frame and find out if market is bullish or bearish. And how do you know if market is bullish? Market is bullish when you notice that the price is creating a new high and also breaking that new high. And also breaking that new high. That means price is creating higher high, higher low, higher high. This high is higher than this high. And this low is also higher than this low. So this is higher high and this is higher low. Okay. So when price is creating higher high and higher lows, it means that the price is bullish. That means for that moment you'll be looking for a buy opportunity. But if you open your chart and price is doing something like this, lower low, lower high, lower low, lower high, this low is higher than this low. Okay, that means price is moving in a bearish direction by creating lower lows, lower high. So when price creates a new low, price will go back and break that new low to create a new low. That means price is bearish. Okay, this is step number 1. Identifying in which direction the market makers are moving the market. Once you identify this thing, you are good to go. Then you move to step number 2. All right, step number 2. What do you do in step number 2? Now, for a bullish trend, you have identified that market is moving bullish. So what you'll be looking for is to take a buy. So what you need to do is to wait for price to pull back into the institutional reference point. That is when price is trying to create their lower low. Okay. As this price move from this zone, let me show you for with this arrow. Pay attention. As this price move from this zone to this zone, all right. So move back, wait for price to start pulling back into the institutional reference point. What do I mean by institutional reference? I mean order block, fair value gap. Okay. Now, wait for price to pull back into the institutional reference point that is inside your discount zone. Now, what do I mean by discount zone? If you use your fib level, this is my fib level. Let me draw it before so that you understand it perfectly. Use your Fibonacci tool. Take it from your swing high to your swing low. Let me remove this. Take it from your swing high to your swing low. You made this market in this form and you're waiting for price to pull inside your 50% retracement. Now use your Fibonacci tool, put it from your swing low to your swing high. I use color to demarcate my own. So the golden shaded zone is my discount zone, while the blue shaded zone is my premium zone. This is my discount zone and this is my premium zone. So I wait for price to pull back inside this institutional reference point. I'll be looking for other block inside this zone, fair value gap inside this golden shaded zone. That's what I mean. So all I need to do is for wait patiently, let price pull back into this zone. Okay. If price pull back into this zone, I will highlight that other block that price pull back to. If it's other block, I will highlight it. If it's fair value gap, I will highlight it. I will shade it and mark it. And if I do that, I will prepare to take a step number 3. Let's assume that this is my other block. I will shade it. I will shade my other block this way. Okay. If price pull back inside this other block, I will shade it. Immediately I shade it this way, I will now leave 4-hour time frame and move down to step number 3. Step number 3 is moving down to 15 minutes time frame. Okay. So what do we do in 15 minutes time frame? Let me explain. Remember that we have shaded our order block, and this represents our order block, that H4 order block that we shaded, okay? And in 15 minutes time frame, okay, we're waiting for price to pull, immediately price pull back into this order block. We're waiting for us to see a shift in market source, like a change of character. What do I mean by a change of character? Look at this price, look at this price here, this price movement here. Price is creating lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, higher high. That means price has closed above the previous lower high, signifying that 15 minutes time frame has aligned itself to bullish trend, the same way the 4 hour time frame is bullish. 15 minutes time frame has done what? Also went bullish by shifting structure here, closing above this lower high, creating a higher high. So immediately the price created higher high on 15 minutes time frame. The next thing that you do is to also wait patiently, let price pull back into your fair value gap or other block before you take your trade. Okay, you can see this price, wait for price to pull back into this your fair value gap here. Okay, and also use your fib level to measure your 50% retracement from your swing low to your swing high. Once you notice that price has pulled back into this fair value gap, you can take your trade from this fair value gap. Okay, if you want to make it to be super, you move down to 1 minute time frame and watch out for another shift to market source in 1 minute time frame. But if you want to be aggressive, you take it from this fair value gap. Okay, so let's go to the rate chart and observe what I'm teaching you. So this is good. This is good. SAUSD. And this is a trade that I took on 23rd of June 2025. All right. I made this price when price was moving up. So price has created this high. Price has created this high. All right. Price has created this high on a 4 hour time frame. Price has created this high because price moved from this zone. This is low and created a higher high. So what I'm waiting for is price to do what? To come into this zone. And you can see this, I've already marked it. You can see this other block, this red candle is another block. That was all I was waiting for. So immediately price comes to this other block. Okay. The next thing you have to do is to do what? You move down to 15 minutes time frame and watch out for a shift in market structure. So let's go to 15 minutes time frame on the 23rd of June. So we move down to 15 minutes time frame, and let's this is the range that I mark. All right. So let's analyze this chart together. So price was coming down from this zone. You can see from this zone, price was creating lower low, lower high, lower low, lower high. We created a lower low here. We created a lower high. We created a lower low. Suddenly, price shifted the structure, created a higher high. At this point, you start monitoring for price to pull back inside your fair value gap and your or other block before you take your trade. Now the 15 minutes time frame has aligned itself to bullish. Remember the 4 hour time frame is bullish. Now the 15 minutes time frame has aligned itself bullish. So let's wait and see what happens. Now, now that price has closed, this will close on Friday. This bullish happened on Friday. So I waited for price to open. You can see when price opened here on Monday. Okay, and we still went up here. So from that Monday, price started coming down. Price started coming down. Already there's a fair value gap here. You can see it here. There's a fair value gap. If you don't know what is fair value gap, there's a video in my channel. I will link it in this video. Go and watch that video where I teach you what is fair value gap. You can see there's a gap between this, the third candle and the first candle. There's a gap in between them. Okay, between the wick of this candle and there's a gap. So this is my trading zone now. So I have my first order, my first entry on this, you see this, the week of this fair value gap, that's where I put my pending order. I have my first entry there, and when price came that Monday morning, price picked my order and went in about 80 to 100 pips and come back again inside this same fair value gap. So when I see that price has traded inside this fair value gap and give me this pin bar by rejecting it, and the next candle form bullish by closing above this pin bar, this green candle, I open a second trade here. This is when I open my second order. I opened two orders that day, and I'll show you a proof. And price went and smashed my take profit. Now let's go to my community where I drop these signals. So this is my Telegram channel. This is my Telegram channel where I drop signals. You can see it on 23rd of June. So when I said good morning and welcome to new trading week, looking for buys on gold, we send the signal if confluences align. After a few moments, I say buy gold now. Okay, and you can see this is a pictorial chart. This is on a 4-hour time frame. This is a pictorial chart. Okay, when I say buy gold now, let's go down to more details. So when I say we are getting paid this week, and you can see the signals yielded result here. You can see it here. You can see it. I took my first trade at 33.52.7, and the second trade I took it at 33.58.11. And I closed this first trade at around 300 and something pips. Okay, you can see the loss size I used on this trade, and you can see the money that I made on this trade. Okay, so this is how I drop signal once in a week in this free Telegram channel. So if you have not joined this Telegram channel, kindly find the link and join our free Telegram channel. And if you are new to my YouTube channel, kindly subscribe to my YouTube channel because I'll be dropping this type of content every week. See you guys in my next episode. Cheers.